Hi everyone, let's cover my Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we count a 5-wave leading diagonal in a wave 1 or A, followed by a 3-wave corrective structure in a 2 or B, and then we want to see continuation up in a wave C or a wave 3. The most common retracement target for a wave 2 or B is the 0.5 to the 0.786 Fibonacci, taken from the start to the end of 1 or A, giving you a target between 82.7 and 79.1K. Inside this target area, we have some additional support between 80.3K and 81.1K. And as you can see, this is actually very important support because below this blue box, there is a bit of a gap. There's not really anything going on till we take the low at 76.5K, which also is the invalidation for this bullish scenario. At the 3A2, we also have a target box, the blue box over here, between 83.8 and 84.2K. The 0.382 is a common retracement target area for a wave B. It is a little bit less common for a wave 2. Finally, you see the vertical lines on my chart, and this is a fib time taken from the start to the end of wave 1 or A to compare this structure to the upside in time with a potential retracement in 2 or B. You want to see 2 or B at least finish after the 0.382 fib time, which is sitting on Saturday, the 29th of March, 5 p.m. Central European Time. If we then cover the bearish scenario, then we count a finished WXY to the upside. And then we want to see a move to the downside, of course, also moving to that 80K level. Now, in this case, this structure is counted as a leading diagonal. In a wave A or 1, we want to see a 3-wave correction in 2 or B, and then a move down. Common target for 2 or B, again, 05786, 87.3K, 88.1K, and preferably B or 2 finishes after the 0.382 fib time, sitting on Friday, the 28th of March, 5 p.m. Central European Time. The invalidation for this scenario is 88.8K, and that is quite important because a wave 2 or B can be any corrective structure, and in this bullish scenario, that also means a flat structure where you create a wave A to the downside, then a 3-wave move to the upside, wave B, that takes out this high, and then a move towards the downside again to finish 2 or B. The moment you take out this high, this bearish scenario is invalidated, giving probabilities to the bulls. Then there are 2 alternative scenarios that I at least want to cover in this video. Also, because tomorrow it might be unlikely for me to provide you with an update because I have a family over. They arrived today, they're already here. So first of all, the unfinished diagonal where we count 1, 2, 3, 4, 5. In this scenario, preferably wave 4 and 1 overlap. That's most common in any diagonal is overlap between wave 1 and wave 4, which as you can see did not yet happen because price did not touch the high of wave 1. So preferably we then move below 85.3K, but these red lines mimic the invalidations of this scenario. 84.6K is the invalidation at the moment with the current candle, but the moment price is going to start or continue ranging and ranges till the 28th of March, 1 p.m. That is when this line over here becomes more important. And that line over here is a line taken from this channel, a channel from the high of 1 to the high of 3 to the low of wave 2, because a contracting diagonal is by far most common. That is what we're looking at here. The moment you touch the lower trend line of the channel, it is not contracting anymore, and that is why this is an invalidation. Now, by all means, in this scenario, you want price to take out the high, and we do have resistances to the upside. First of all, this point of control at 90.3K, and then above that, we have a blue box over here. Important resistance between 92.4K and 93.4K, especially the weekly naked point of control at 92.5K. After wave 5, we then want to see again a retracement to the downside. You kind of get the feeling of the video, right? Every scenario basically leads to a retracement to the downside, testing lower levels. If wave 5, however, is too long and touches 93.5K, then this scenario is invalidated. And then finally, an unfinished WXY, WXABC, a double zigzag to the upside, right? ABCW, X, ABC, and wave Y. The reason why the probabilities now start to decrease for this scenario is because of time. Now, time is never an invalidation. It does have an impact on probabilities. And it's mainly the time difference between wave A and your wave C. Wave C is significantly longer in time compared to wave A. If you take a fib time from the start of A to the end of A to the end of B, comparing A with wave C, then price is now ranging on top of the 4 fib time, meaning wave C is 4 times longer than wave A. And that is when the probabilities start to go down. Again, not an invalidation, but in the end we trade probabilities. Also, wave C is not even finished because you would look for a 1, 2, 3, 4, 5 wave structure. You still actually want to see higher. You still need to see an impulse up. So very likely then wave C ends around a 5 fib time or a 6 fib time, significantly reduces probabilities. Even though the official invalidation for an impulse and therefore wave 4, if we look at this range as a wave 4, 1, 2, 3, 4, 5, is the 0.618 at 85.6K, which has not yet been touched with this low nor the low that was created today. One thing that I do keep in mind is the 886. The 886 is a very rare target for a wave 2, more common for a wave B or a wave X. Does increase the probabilities. That's what's happening here, is corrective compared to it being impulsive. But one of the impulsive structures that quote-unquote more commonly can touch an 886 is the diagonal 1, 2, 3, 4, 5. So in an impulse, 1, 2, 3, 4, 5, very rare for wave 2 to hit an 886. But in a diagonal, it does happen more often. Again, it remains uncommon, but it does happen more often, and that is why the bearish scenario is a diagonal here. Finally, if we look at the CVD, then what you can see over here, let me clean this up a little bit, is that price has been showing some bearish CVD divergences as we moved towards the downside here. Lower highs on price, higher highs on the CVD, absorption of market longs by limit short orders, pushing price to the downside. Also a big bearish CVD here, by the way. No idea why it doesn't show. Lower high on price, higher high on the yellow line. Now you can see if you zoom out that we do have bullish CVDs as well, higher low in price, lower low on the CVD. So that's interesting. But what I actually want to see and what is most important is local CVD divergences. So what the bulls need to do here is get rid of those bearish CVDs all the time and instead create higher highs and higher lows with bullish CVD divergences while I'm quickly refreshing my chart here. So we want to see market structure to the upside, which at the moment we do not yet have. The bears want to again have market structure down. So I'm not really interested in any CVD divergences going on here. I am most interested in brand new CVD divergences going on the right side of the recent low, which means I do prefer more information before I really start trusting the CVDs. We also have some news tomorrow, Friday here, March 28th, 1:30 p.m. Make sure you trade safe as it can increase the volatility on the chart. And if we then look at the different scenarios, then this is basically what these scenarios are summarized, right? These are the expected, or that's the expected price movement based on all the different scenarios. And the general consensus here is that it becomes interesting to look for a retracement. Of course, we have very interesting resistance at 90K, 92, 93K, 886 touch, right? So it could be interesting to take the high, but by all means, it starts to become more and more interesting to look for a retracement, look for those supports, and 80K is very important support. Here you can see it written down for our WXY and diagonals, higher probabilities. In both cases, more interesting to start looking for retracements and price to move to the downside, touching some support. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.